I'm Crystal Oculee, the Chief Financial Strategist here at Confidence Wealth, and every week I try to bring a topic to you that's talked about and I feel like it can help you and your family. So one of the topics that were discussed this week with several of our clients were estate planning. Estate planning is always on everyone's mind. They want to make sure that things are set up the right way for their heirs. And, there was a question of trust versus will and, what's the difference? Why do I have to do one versus the other? That type of a thing. And obviously, if the situation is super simple and you have maybe several accounts, and that's really all there is. And your beneficiaries are very straightforward. No one's underage. Everyone is going to get things evenly, and you feel confident about that. Then, doing a simple will, financial power attorney, and all the things that really goes with it can be good enough. But majority of people that we meet, they don't have a simple situation. What that means is they own properties in that mix. They may have, children that have children of their own. And what if something happens to one child? What do they want? The shares of one child go to the heirs of the other child, not the other way around. Like, meaning if you have two kids and one child A, child B, right? And if child A passes away, they don't want all the assets just to go to child B because child A may have kids underneath them. So they want the child A, all of that to go to what's called per stirpes, to the children associated with that child. So again, we never want to think about bad things happening to our loved ones, but there's a lot of complexity that goes into a estate plan and the things that you have to think about. The other very important thing is that you really want to make sure that you don't burden one relative, where I've seen this, where someone will say, well, I'm just going to put everything in the name of, let's just say, this child, and this child A is going to then distribute everything to everybody else that I want. That way I don't have to worry about too much paperwork. I'll just put child A as the beneficiary and then I'll deal with that. So even if child A is very trustable and you 100% trust that they are going to be doing everything that you want them to do, it's not fair to them for many reasons. Let's discuss reason number one. The burden of all the other beneficiaries going, are you sure you're giving me my share? And they're just sitting there hoping that child A is doing everything the right way. The other issue is, what if now child A is getting inherited IRAs and all these different types of taxable accounts that are going to be taxed, and it's going to be taxed at her level with her income, all for her, and she's going to have to now not only pay taxes on everything that is getting inherited, but also it's taking her own income tax bracket to the next level, and she's paying more on her own salary and her husband's salary just because everything went to her. And after that, she has to now distribute everything, which means she's going to get less because of all the tax consequences that she had to deal with. So I just want to make sure that when you think about putting a child as a joint, or you think about just putting one person as a beneficiary going, they will give everything else to everyone else, that doesn't work simply and as easily as that. I find that a lot of times families that don't want to discuss putting a trust in place or estate plan in place is a fear that they have of death itself. And I get it. I get that that's not fun. But you also need to really make sure that you're looking at this as a lifetime of what you have done, that you want to make sure it is getting distributed the right way and no one is getting, in a sense, hurt in the process when it comes to taxes or the burden of having to deal with things that they were not, even thinking that they had to deal with. And again, I'm keeping this very basic and very general. I'm not going into the details of trust, will, and all of that. I have tons of webinars for you to listen to when it comes to that. If you go to our site, if you go to icwm.com or Confidence Wealth Management and look up our site and go under education, there are tons of webinars that address estate planning. I have estate planning lawyer on there as well that we interview. There's tons of information for you to get educated on. I wanted to keep this topic very basic and just high level and have you understand that it's not sometimes as simple as adding someone to your joint account. as adding someone to your house because they're not going to get the step up. So let me give you a quick little example. Imagine you put your child as the joint owner on your house, and now you purchased the house at $500,000, and at the time of death, the house is worth $1 million. Well, if they were the beneficiary, they would get the step up of $1 million, meaning now if they turn around and sold the house, they will not have any tax consequences. But if you put them down years ago as the joint owner, then they're sharing the original cost basis with you at the time when the joint ownership happened, which means anything on that gain portion for theirs, they're going to have to pay capital gains on if they turn around and sold it. So you really have to be really careful when it comes to estate planning and how you're going to put all of your beneficiaries down. So in the meantime, if you haven't met with your team in a long time here at Confidence Wealth and you want to have a quick conversation to make sure everything is in order, feel free to do that. I know majority of time our holistic clients, we're seeing you on a regular basis, so this should be already addressed and updated. But just putting this out there, or if you're a friend and family of someone that's listening to this, of a current client, and you're thinking, Crystal, none of my current advisors have talked to me about this, and you really want to make sure that things are set up the right way for you, please feel free to reach out to us, and we'll be happy to have a session to see if there are things we can help you with. So that's it at this end. We'll look forward to seeing you in the next session. If there are any topics that you like to discuss, feel free to reach out. Have a great one.